Trading with emotions is one of the worst mistakes you can ever make in this forex market. Anytime you trade with emotion, that's when the market hits hard. So in this video, I'm going to give you 7 tips that keeps me going. Number 1, I walk away. Anytime I'm in a trade, I forget about the trades. I walk away, step back. I don't want to be in the computer and try to see how the candlestick moves. You see, that distracts me. That gives me emotions, right? So let's say I just took a buy entry. The market won't just go up, all right? The market takes time. It needs to breathe, So that time or that period where the market is breathing, of course, when you open your position, you'll always start with the lows. So when watching the market, basically you'll be panicking. But when you walk away, you won't be seeing the madness that the market is doing. I'm a swing trader again, and most of the trades I do take probably in the evening. And to my advantage, when I make my entries, guys, the trades do play out when I'm asleep. So I'm not there to watch out the market each and every time it moves, all right? And number 2, find out which is the most volatile session or which is the most non-volatile session. So you need to choose your pair wisely and choose your session wisely. There are some volatile pairs and session, guys. For example, London session, New York session. So if you can't handle that, then avoid that. Take it slow. Remember when I started this forex trading, guys, I used to trade USD JPY, but then 2019 USD JPY was not making huge movement. One candlestick will only give you 10 pips, so which was good to me. So avoid those pairs that have volatile movement. For example, gold. Avoid US30, avoid Nasdaq, right? For your peace of mind. And number 3, stop trading after 3 consecutive wins or 3 consecutive losses. Of course, guys, let's say you just took wins. This week has been good, all right? You've only been winning. Maybe this day has been good, man. Any trade you hit turns to be a win, all right? So there's that kind of dopamine failing, I believe you'll think that you're a god. So anytime you see a setup, you'll take that entry. But let me tell you, the trade people, the market movers are very smart. They give you what you want to see, right? So let's say you've been trading reversal, you've seen an inverse head and shoulder, you take your buy, then the market goes south side. You see that the market gives you a double top, you take your sell, then the market goes up. See, they're very smart. They give you what you want to do. So anytime you make your wins, stay away, man. Call it a day. Do not be greedy, right? So this is it. And anytime you take your losses, guys, then avoid the market too. 3 consecutive losses, avoid the market, because of course you'll be going back to revenge. And you know what happens when you revenge trade, all right? So that's when the market is waiting for you, okay? Because you are full of emotion, and now the market is waiting for you. It's going to come, it's going to punish you handsomely. I don't know which number is that. Now the next one, don't look at your profits, all right? Let's say you are in a trade. Yes, I'm in a win. My beta trader 5 or beta trader 4 is blue, so you'll be glued there, right? Or let me say you are in red, man. You're in red. So that's when emotions kicks in. Why is this market not going to whatever I want it to go? Why is this market not going up? Why is this market not going down? So you start getting that emotion. You start getting annoyed. But remember, the market might sometimes target your stop loss. For example, you have a stop loss 30 pips, 20 pips, but the market is almost hitting your stop loss. Only 1 pip, 2 pips to your stop loss, right? Maybe 5 pips. I can assure you, you're going to close that trade if you're watching. And the moment you close that trade, the market is going to reverse on your side. And when you see that the market will only have missed your stop loss, maybe a pip, 2 pip. So that is going to be quite annoying. I know most people who have been doing such things, man, and I can tell you the results not always that good, right? So closing your trade, I've been doing this for a while, since I started trading. I've been maybe I'm in a position, and then I see that I'm in red, I close my position. This trade is probably going to take me out, so I close the trade, and guess what? The market reverses and goes to my anticipated direction. And during this time that the market is going to my anticipated direction again, that's when I also take that trade again. So I'm chasing the trade. So meaning, let's say my risk initially was 20 pips, so now I saw the market has already started giving me a push to the up, all right, as anticipated. Then I take that buy. I'm very sure I'm not going to get the market from the initial position. So if the initial position was 20 pip risk or 30 pips risk, that means I'm going to risk more, right? Because I'm already chasing that market. I'm late, right? So you can find, oh, maybe I was supposed to risk 20 pips, then now I'm going to risk 40 pips because I'm chasing that trade. So avoid that thing, right? Then ask yourself, are you scared of the market? All right, in this period of my trading, guys, I've come to enjoy the trading, forex market trading. I've really come to enjoy this thing, right? I treat it as a game. So anytime I'm in a market and I see that the market is doing its thing, like I say, yeah, you let the market do its thing. I keep on saying this, let the market do what it wants to do. So when the market is doing what it do, guys, I study the market, right? I go back and see, oh, this is the pattern that's happening. This is what the market is doing at the 15. This is what the market is doing at the 1 minute, right? So let's say I took a buy and the market is falling. I might go back to the 1 minute and say, oh, so I took an early entry, so I'm calm, After all this madness, I know the market will go to wherever it wants to go, either way, right? So this is it. Anytime I see that the market is doing its madness, I'm calm, because at the end of the day, so I know that these people are trying to take out most of the stop loss. But then I have a video talking about the safest way to have your stop loss placed. All right, it doesn't mean that you won't be hit. Of course, the market is the market, nothing is guaranteed, but then you have to risk 1%. That is it. All right, so this is it. I'm never scared of the market because I understand the market move. I don't have to beat myself, I took a buy, this market needs to go up. I understand after an impulse there has to be a correction. So anytime I see the market pulling back, I know, and I tell myself, stay calm, don't close your position, this is just a correction, let the market do what it wants to do. And guess what, after correction I also have to identify patterns and scale in, capitalize. Right, I capitalize on my entry. You see, that's why I'm never scared of the market. I enjoy the process. So, and then I believe the last one, maybe the second last should be lower your risk. All right. Most people, I believe, you'll be annoyed or you'll have so much emotions because you have bigger lot size. There's a website, guys. You need to calculate your risk. You need to calculate your lot size. It's there. We have pip calculator. We have lot size calculator. Do not make your entry before doing the mathematics. All right, so let's say I have something, I have a pair that I want to take a position on. First things first, I need to understand how much am I going to risk on this. Guys, I do risk only 1%. I never go more than that. 1%. I go to that website. All right, do my maths, let the computer do the maths for me. Right, it's not rocket science, guys. Key in your balance, your account balance, then have your lots, your entry position and your stop loss. Then the website will do the maths for you. Right, so if you're planning to risk 1%, you'll be told, in this one you should only risk use a lot size of 1 point something or 0 point something. Right, so you'll be calm, because at the end of the day, if the market takes you, it's just 1%. You don't care. It's just 1%. You don't care. But when you know that your risk is huge, man, a drawdown really pains. You'll be bleeding. You might be in a 5 pip drawdown, but the numbers will not be looking like 5 pips. But when you risk 1%, 2%, whichever you want, you won't care, because at the end of the day it's just 1%, because you risk 1% and you're targeting 3, 4, 5, 6, 7. All right, anytime you take a loss, it's only 1%, and if you take a win, 3%, it's 4%, 7%. So your 1% won't be counting. So that's it, baby. And the last one, establish your trading plan and follow those plans, journal them. All right, you see, I upload my YouTube videos, guys. I take my screenshot before the trade moves, so that anytime I go back to the market, I need to understand what happened. I took my entry at an impulse, so yes, I deserve the punishment, guys. You see, when I lose because of my mistake, I won't be mad at myself. I deserve the punishment. I tell the market, you taught me. That's it. So the next time I won't be doing the same mistake. That's the stupid mistake I won't be doing the next time I see that kind of a manipulation, right? Or rather, if I make my entry and I was in a hurry, for example, All right, then if the market takes me out, yo, I smile. You know what I tell the market? I say, all right, this time you got me, but there's no problem. 1-0, all right, you're 1 and I'm 0, no problem. But then I'll attack. I'll be back too. All right, so that's it. If it takes me out, well and good. My time is coming. That's how I trade forex. You see, no feelings attached. Be happy. If the market takes you, be happy, because we never lose, man. We're taking in lessons. So anytime the market takes me out, baby, like I say, I'm happy. No problem. I'll get you next time. If this was the reason why you took me out, the next time I'm not going to do this. And I have a big video also. I talk about sniper, yo. All right, we are attacking the sniper. Let the sniper tell us its original position. That's when we attack. All right, this is it, baby. Before I make my entry, guys, I analyze the market and I want the market to do what I want to do. All right, the market gives me the pattern that I want this market to give me this kind of a pattern, this kind of a reversal, and then the market I need to break this low or this high. And if that's the case, then that is when I execute. If the market doesn't do that, I let it continue doing what it wants to do. All right, that's it. So I believe, guys, I help you, man. And adios, mi amigos. Peace.